Yo, what's up, y'all? It's your boy DMV Computer Man. Today we're going to talk about investing, and I'm going to help you guys kind of put together an investment plan. A lot of people don't get involved in investing for a couple of reasons, and one of the main reasons is they don't have a plan. They can't see the future growth of where they're putting their money at, and it doesn't make sense to them. And we're going to talk about compound interest as well. Let's go. All right, y'all, so look, right? Investment plan. And we're gonna break this down into 4 simple steps that anybody can do. All right, so the first step is find your 5 best stocks and your 5 best cryptos. And what I like to do when I'm doing this is like doing an NBA draft or NFL draft, or if you ever did DraftKings or something, you need to take and get a drawing board or some type of paper or something where you can analyze all of the stocks that are at the top of their game or the top of their niche, whether it's soda and it's Pepsi or Coca-Cola, or whether it's computers and you talking Dell and HP and Apple. You want to analyze these companies at the top of their niche and figure out which ones will be your top 5 picks. You might not be able to put LeBron and KD on the same team. You dig what I'm saying? You might not have the capital to do so, because a lot of the top 5 are going to be high value picks. So you want to break down and sit down and figure out your top 5 stock and your top 5 crypto. All right, so step 2. You're going to calculate 10% of your annual income. Your annual income is your yearly income, if you don't know what that means, not your monthly income. 10% of your annual income. And then we're going to divide that by 10 because we're picking 5 stocks and 5 crypto. So I'm going to give you an example of how that will work, right? So we would take 10% of, let's say, $100,000 salary. So 10% of that will be $10,000. Now, we know that we have $10,000 to invest. That's $1,000 per stock. And that's what's going in for the year. All right, so step 3 is we're going to take that number that we just got from our equation and we're going to divide that by 52, because it's 52 weeks in a year, right? And that's what's going to let us know how much we should do a weekly auto buy. And that's step 4, a weekly auto buy on each individual asset or stock or whatever you want to call it, right? So let's break that back down. We have a salary. We're going to divide that salary. We're going to take 10% of that salary and divide that by 10. And we're going to invest that into 10 different assets. 5 stock, 5 crypto. You following me? If y'all liking what I'm saying already and it's making sense, make sure you guys leave a like in the video, y'all, because I strive on feeding this channel with more and more content, but we need to get the algorithms going. So make sure y'all hit the like button and make sure you guys subscribe to the channel. And then what we're going to do from there, right, is we're going to divide that by 52, because it's 52 weeks in a year. And we're going to know what we can actually invest into these assets on a weekly basis. And the reason that we do this on a weekly basis is because it's called dollar cost averaging. We're dollar cost averaging the price of what we're paying for this asset or this commodity or this stock, whatever it is you're investing in, right? We're dollar cost averaging it so that we're not throwing a lump sum in at one particular price point. And that keeps us from overpaying on the actual stock or the commodity or the asset, guys. So if you like this information and you're looking to do something long term as far as investing, you're trying to put some money away for your kids, maybe a retirement fund, maybe a college fund, or a rainy day fund, or whatever it is you're looking to do. You're trying to create generational wealth, something you could pass on to your kids or their kids and their grandkids. Look into buying something long term, dollar cost average, and have an equation and stick to it. My biggest mistake when I first started investing was I didn't have a plan. I just was putting money in when it was convenient. But had I had a plan, I would have been introduced to compound interest, whereas these commodities and these assets, they're going up and down, and they're going up and down, and you're buying at lower prices. And what's happening is the interest on what you've already invested is compounding, and you're making more and more money. So when you look at it 5, 6, 7, 8, 9, 10 years down the road, you've acquired a nice amount of wealth. And this is how wealth is acquired, guys. If you look at the inflation of the US dollar, we're at 7% in 2022. If you take that money that you have, that same $10,000, and you saved it in the bank, you're losing 7%. Now, yes, the bank is going to give you some type of rate for keeping your money in a savings account, but it's like a 0.5%. So you really losing 6.5% by saving your money. So come up with an investment plan. If you can do 10% of your salary, that's a great start. If you can live without more than 10% of your salary, that's an even better start. But come up with a plan, stick with it, guys. And 5, 10 years from now, you're gonna be thankful that you watched this video. So go ahead and give me a like right now, y'all. Let's turn up, y'all. I'm trying to get to 1,000 subscribers. So make sure y'all share these videos on your social media platforms. And also follow me on DMV Computer Man at Instagram. All right, let's go.